What is Bitcoin? Is it gold 2.0? And will it reach 1 million per coin? Let's get into it. Firstly, to understand the use case of Bitcoin and the power of Bitcoin, we really have to understand what it is, and that is money. But what really is money? Throughout human history, there's been a ton of examples of money. Salt, cattle, seashells, precious metals like gold and silver. Without money, we're stuck trading a cow for a pair of shoes. So money facilitates for a transaction beyond trading. So it's a medium of exchange. And the better the money, the more it conforms to these three criteria. And you'll understand as I get into the video why Bitcoin conforms to this criteria better than anything else in human history. Money is saleable, which means it's able to be sold over scale, space, and time. Number one, scale. Let's imagine I can only trade and I wanted a cup of coffee and I only have my iPhone to trade. Well, the iPhone is 1,000 times worth a coffee and I can't just break the iPhone into 1,000 little pieces, otherwise it'd be worthless. And trading one for one isn't like for like, it's not a fair trade. So money needs to be divisible into lots of pieces so it can facilitate for both small and large transactions. Number two is space. Imagine I have a house to trade. There's a lot of value in that house. However, someone who wants to trade it, they don't like the location, but it's impossible to move that house. Therefore, for them, it has no value. Let's take an apple. It's divisible into many different pieces, and it's pretty convenient to take around with you. But this brings us to our third and arguably most important point, and that is that it's saleable over time. Apples quickly rot, so they lose their value after a couple of days. A good money needs to hold its value over time. What makes for a good money? Well, there's a reason when something's the best, we call it the gold standard. Gold has been the shining example of a good money, the best money in human creation since Bitcoin. Gold is very difficult to produce more of, so even when the demand is high, the miners and producers, they can't just indefinitely produce because it's very toxic and it gets exponentially harder over time. So even when that demand increases, the producers can't flood the market with gold. Therefore, it holds its price and some. You may ask, why don't we use other precious metals, silver and copper, which have in the past been used as money? However, the key difference between gold and these other precious metals is that these are very easy to produce. So when the demand increases, the producers are incentivized to produce more of and flood the market with that supply, bringing the price down. This is called the stock to flow model. Gold is a hard money with a high stock to flow. Silver is a soft money with a low stock to flow. So taking our three criteria, why is gold so good? One, it's scalable. Through advances from metallurgy, you can make small and large coins. Over space, it's easy to transport gold, and as you'll understand through the gold standard, it becomes easier to transact. Number three, it holds its value over time. Gold is pretty much indestructible and it's very difficult to produce more of, and it's finite, so it holds its value over time. Because of the properties of gold, we introduced something called the gold standard, initially by Britain, but it was adopted worldwide and brought in the greatest industrial boom in human history. The gold standard effectively means if you've got £1,000, you can go to a bank and exchange your £1,000 for £1,000 worth of gold. Essentially, these fiat currencies, a fiat currency is a government introduced paper currency, is backed by gold. So essentially, we as people own gold, we just transact using this paper, and at any time we can take all of our gold out of that treasury. The gold standard has one Achilles heel, and that is that it's centralized. The power is with the producers, who are these governments who introduce these paper currencies. But the problem with that is that they can produce as much fiat currencies as they like, and the temptation to produce more paper currency than they had in gold was too great, which ultimately is why we came off the gold standard. Money typically has had an intrinsic value. So cattle, salt, gold, they've all had value beyond being a medium of exchange, whereas these paper currencies have no value whatsoever beyond the trust we put in governments. So we've pretty much traded our money, commodity, for trust. At any moment, the government could switch the money off and the value would go to zero. However, if you did that for cattle or salt or gold, it wouldn't go to zero because there's some intrinsic value. But with these paper currencies, they're only as valuable as what the government tells us they are. When World War I started, the temptation to produce more money to fuel the war effort was too great, and ultimately that's what's happened. And that started the snowball effect coming off the gold standard. If you can produce, you need to remember, a producer is always incentivized to produce, because when they print the money, they're instantly very wealthy. But it's the citizens who pay the price through inflation. This is why the wars could go on for years and years, because money could effectively never run out for them. It's just the people who pay the price for inflation and most certainly tax as well. This is what we've seen play out since we've come off the gold standard. 56 out of 57 hyperinflation events have been on fiat government-introduced currencies. Why do we need a currency to hold its value over time? Well, a high-functioning society needs a good, stable, strong currency. That's probably the biggest determining factor, what makes a high-performing society. Because when people save and have a long-term perspective, that money then fuels other projects and it's loaned to businesses at an interest rate. But as no one's saving at all anymore, there's no money for them projects, so there's a gap. And the government fills that gap by printing more money and artificially keeping interest rates low. However, this cycle of artificially low interest rates and indefinitely printing money effectively just moves money from the people into the producers. There's only so much meddling you can do in an economy and so much printing until the problems eventually catch up with you. And essentially, by taking out more debt and printing, you're just robbing from the future generations and robbing your society of all their savings. There's only so long you can do that before the whole house of cards come crumbling down. Enter Bitcoin. Gold has been the best money that humans have ever invented until 2009, when a new kid came on the block, pun intended, called Bitcoin. Bitcoin is the perfect money. Let's take that 3 criteria. 1. Scale. 1 Bitcoin is divisible 100 million times into 1 Satoshi. Number 2. Space. It's digital. It's able to be sent electronically all around the globe for a small fee. Number 3, and the most important one, time. There's only 21 million Bitcoins possible to be in existence. There's currently 18.6 million Bitcoins that have been mined. By 2025, there'll be 20 million Bitcoins in circulation. To mine that final 1 million Bitcoins will take to 2,140, so over 100 years. There are 46 million millionaires on the planet. If every single millionaire decided they wanted to just have 1 Bitcoin, there's not enough to go around. Even with gold, Elon Musk could just mine an asteroid with $10 trillion worth of gold and sell that to the market. That's not possible with Bitcoin. There is ever and will ever only be 21 million Bitcoins in circulation. Bitcoin is decentralized, which means it doesn't share that one Achilles heel of gold, and it's looked after by every single person who owns and uses Bitcoin. And the more people who hold and transact with it, the bigger the Bitcoin network comes. Gold, in order to become more than just a store of value and a medium of exchange, needs to be centralized, whereas Bitcoin is decentralized. So how does this work? Well, this is where we put our tech hats on. Bitcoin is made on the blockchain. A blockchain is a chain of blocks. Who would have thought? Think of a block as a spreadsheet containing a ton of information of all the transaction history, and it's all publicly available info. It's difficult to wrap your head around, but Bitcoin is built on a foundation of trust by the producers, who are the miners, and the users and the hodlers, that is made possible by its very design. So in order to get a Bitcoin, to mine a Bitcoin, you have to solve an incredibly difficult mathematical equation that the community verifies whether you've solved it correctly. It's very difficult to solve the equation, but very easy to verify. If you verify correctly, you get a Bitcoin. If not, you don't get anything, and you've wasted your time, your money, and your energy. Same with adding a new node or a block to the blockchain. To verify a transaction, it has to be voted for by the community. So if you verify it correctly, great, you get a fee. If not, you've wasted your time. So the producers are incentivized to solve these problems correctly, which is the proof of work, and verify the transactions correctly. So this could be where the question of scamming, hacking, and collusion comes in. Why can't just 50+% of all the miners just verify incorrect transactions and effectively steal Bitcoin from the blockchain? The Bitcoin network is so big and so robust that that kind of collusion is actually very difficult, and as it grows and it scales up, it becomes even more difficult. However, theoretically, it is possible that 50+% of all these verifiers could verify a transaction and collude together to steal Bitcoin from the network. But as soon as they do that, it's all publicly available info, as soon as they do that, the trust in Bitcoin will absolutely plummet. People will sell, they won't use it, so the Bitcoin that they managed to steal from the blockchain would effectively be worthless. People are incentivized to verify these things correctly because they're going to make money by buying and holding that coin. As the Bitcoin network continues to grow and become a lot more strengthened, all these attempts at hacking just shed light on the potential flaws, and programmers come in and patch it up, further securing the network. A lot of these programmers buy and hold Bitcoin, so they make full-time incomes just by doing that, and they've been able to dedicate their time to further solidifying the network. And any attempts from government to try and intervene and stop Bitcoin has just further solidified the need for a decentralized currency. Woo! Bitcoin, eh? Now to answer the big question, will one Bitcoin ever hit 1 million per coin? The market cap of something is the total amount of money that's in circulation into an asset. So the market cap of gold is 10 trillion, which means there's 10 trillion worth of gold currently in circulation on the planet. Bitcoin has a market cap of 1 trillion. There's currently 1 trillion worth of Bitcoin in circulation. If Bitcoin is meant to be gold 2.0, then it's fair to assume it will reach the same market cap as gold. So if we're currently sat at a 50 or 60k Bitcoin, it's fair to assume there's a 10x from here. So we could see a 500 to 600k Bitcoin. And that's the assumption, and that's why people are saying that hitting a 6-figure Bitcoin is pretty inevitable at this point. This is not financial advice, this is just my opinion, but I think hitting a 6-figure coin is a question of when and not if. But will it hit 1 million per coin? Well, this comes the question, is it really gold 2.0? Will it far exceed gold, so not just a store of value, will it also be a medium of exchange? So currently we don't use gold to buy our morning coffee, but the same, we don't use Bitcoin to buy our morning coffee. The only way Bitcoin is going to get 1 million plus per coin is when we really use it for that medium of exchange. Currently, the speed of the Bitcoin network can't facilitate for all the world's transactions. It can only facilitate for up to 500,000 transactions a day, and that's enough for a small town. So in order for it to facilitate for all the world's transactions, it will need some centralized aspect of it, similar to the gold standard, where the banks hold Bitcoin in the reserve in their treasury, and there's paper currencies you use to buy your morning coffee. You can always exchange that currencies for Bitcoin it has in its reserves. Because of the speed of the network, this is required because you'd only need then 2 transactions in a day. 1, a bank to open their accounts, and 2, to close them at the end of the day. All the millions of transactions would actually be recorded off of the blockchain and simply placed on the blockchain at the end of the day, which means a bank would only need 2 transactions and not the millions that occur. This does raise the questions amongst Bitcoin purists that why should we do that? Because I like the decentralized aspect, and I must admit I do agree. But these Bitcoin purists who have many coins probably wouldn't be too frustrated when their Bitcoin is sat at 2 million plus per coin. As the new generations come, there's a whole generation coming that would never buy gold as an investment, but would buy Bitcoin. And as that happens, it seems pretty inevitable that it slowly grows and reaches the market cap of gold. But the question of $1 million per coin plus, that will come when the banks and the institutions and governments really recognize Bitcoin and start adopting it. The adoption of these new technologies, like the internet, like renewables, like cryptocurrencies, takes so much longer than what people initially anticipate. So if you think it's too late to get into crypto and Bitcoin, I think we're just getting started. Think of this phase and this bull run we're currently experiencing in the crypto space as the dot-com boom. The internet is still around, but there's many websites that aren't. This crypto bull run is similar. Cryptocurrencies are going to be around for many years, but a lot of these coins won't be. Effectively, we're trying to answer the question, is Bitcoin Google? Is it Facebook? Or is it Ask Jeeves and Yahoo? Thank you for watching. I hope you enjoyed this summary of the Bitcoin Standard. If you want to pick up a copy of this book, there is a link in the description. Please use it. If you enjoyed the video, smash like, comment below your thoughts on Bitcoin. Do you own Bitcoin? And subscribe for more wisdom. Boom. Woo! Bitcoin, eh?